Hey, Emmett Dempsey, mortgage broker with Treasure Coast Mortgage here in Port Saint Lucie, Florida. Welcome to another video. Today's video is going to be about the right time to refinance your home mortgage. When is the right time to refinance? And I always make a joke that the answer to every single mortgage question is it depends, which is kind of true. Basically, it depends on your goals. There's no one-size-fits-all mortgage. I know that my industry really tries to make everybody the same. That's kind of what they would really want. But unfortunately, you're different. Your neighbor's different. Your mom's different. All your family's different. So your goals are going to be different. Your family's goals are going to be different. So one of the very first things that I do is try and really dig into what you guys want to accomplish. You know, my question I always ask is like, what are you looking to accomplish and how can I help you? So the answer to the question is when the right time to refinance. There's a few factors you need to look at. You know, of course, you look at your current interest rate versus what's possible. And it's really a comparison of I have this now and I go down this path, or I refinance into something else and I have to weigh the cost and the benefits. And it's really, it sounds simple, but I know it can be kind of confusing. And some of the tools that I use, and I'm going to show you an example here in a minute with Mortgage Coach. If you're just going from a 30 to a 30 and you're saving on payment, so if your goal is interest savings, and of course, how long you live in the property is one of the major determinants, because if you're going to sell in 2 years, it might not make sense to refinance at all. So really, your longevity in that house is going to determine whether it's the right time to refinance your home. So there's a few different goals that you can accomplish. So if you go from a 30-year to another 30-year, or using a VA IRRRL loan or something of that nature, just lowering your payments is the overall goal. And you want to live in a house for at least 5 years or more. I know more Americans are staying in their homes longer than in the past, but generally a 5-year payback. So you have to see what the closing costs are, and of course on a refinance, those costs come out of equity. And I always say that you really can't spend equity, so you're investing your equity to put yourself in a better financial position. So you can either refinance for a lower payment, and then you can reinvest that payment. I also run some reinvestment scenarios, like say if you save $200-300 a month, what if I put that into a S&P 500 fund? Or you invest that. So you can kind of either invest that, or you can invest that in equity pay down. Or you could look at going from you're shortening your term, from a 30-year term down to a 15-year term, where you're really attacking your loan and really paying it down fast. So let's go and take a look at some different examples, and let's see whether it makes sense to the right time to refinance. You can see how I present refinance options. Here we go. Okay, welcome to Mortgage Coach. Basically, I'm going to look at a hypothetical scenario of your current loan versus what's possible. I'll look at a 30-year fixed just rate and term, cash out, and also lowering your term to a 15. So, all right, here we go. Okay, this is what a mortgage coach would look like. Obligatory compliance, your actual rate, payment, and cost could be higher. Get an official loan estimate before choosing a loan. Okay, again, this is just John Doe. Assuming you have a $500,000 property, you owe about $280 or so on your property, about 4.5% interest rate. Remember back in 2018, your rates were in the low fives. So I'm refinancing a lot of my clients that were in the low fives. So this is not a hypothetical way out there scenario. This is what I see every single day. So assuming here you look $150 for hazard insurance, $300 for property taxes. Again, it's just a best guess, just so we can get a good comparison. But anyway, this is how I present these options. So you have, a 1970 payment. Okay, that's what you're paying right now. If you did a 30-year fixed rate and term, you look in here, a 3.078, and that's with no points. You can obviously get lower. You have to look at the fine print when you look at rate quotes. Where we're at in the rate cycle, I'm recommending my clients not pay points. You really have to look at the break even. This is your forever house. It might make sense to pay points. Just so you know, I'm doing a refinance myself, and I am paying points because I ain't leaving this house. So it's really a personal decision, and that's what I talk about when we talk about pricing options. Okay, so this is saving $208 a month. So that's many times I'm getting a lot of appraisal waivers, so there's usually no money out of pocket. All the closing costs come out of equity, and that's kind of how it goes. And then these screens down here show savings over 5 years, savings over 15 years, but kind of like intermediate term and then long term. And you can see if you're going to stay on your current path, you'd be paying $159,000 in interest versus $117,000. So it's not just the $200 a month; it's like $40,000. So it is a significant. Don't look at the $200. Okay, yeah, it's not insignificant and it's not huge, but over time, it really adds up. Okay, so that's the first one. Okay, this option is your 30-year fixed cash out. Okay, you can see that the cash out rate, no points, is a little bit higher because to compensate for the risks from the lender of the cash out, they just price it that way. Okay, so roughly about 40,000 and change out, and it's still lower than what you're paying now. Okay, so the 4.5 is about the same. And if you were to be paying off some high interest debt, some installment loans, and when you look at them side by side, you might be paying a lot more. So I mean, this number could be higher than this number. So if you're paying off a lot of credit cards, a lot of high interest debt, so when we look at a debt consolidation side by side, that's what I would look at. Okay, and on this column, it's still gonna 159 to 139, so about $20,000 different in interest just by the lower rate. Okay. All right, so that's that one. Now, this one is a 15-year fix, which is lowering your term. Again, I have some clients that say, look, I'm already throwing extra money at my payment, but your structure of your loan, if your interest is high, it's not going to amortize, as you would like. It's better to recast it or to refinance it into a lower term. So if you want to make extra payments, you definitely can. All right. So this one's it's $518 more a month, but you might already be paying that extra already on your mortgage, or maybe more. Okay, so on this one, it's about the interest, about the long-term interest. Your savings over 5 years, $23,000 in 60 months or 5 years, and then over the 15 years, it's $59,000. I mean, look at that, 159 to 59. So if I want to save $100,000 in interest over 15 years, this is what refinancing your mortgage looks at. And you wouldn't really know these numbers just offhand, unless you kind of do the math. But I like using Mortgage Coach to show you what's possible. And that's what every refinance is. It's what I have now versus what's available to me in the marketplace. And then I look at my options and then I execute based on my personal family goals. Okay, so that's kind of it in a nutshell. And let's go ahead and go back. Okay, welcome back. Hope those are some informative refinance options. Of course, if you look into to refinance and you haven't taken advantage of low interest rates, definitely give me a call. Let's see what we can do for you. Go to DempseyMortgage.com or give me a call, shoot me a text message. Go ahead and subscribe to the channel and tell all your friends about it. Thank you so much for watching, and I'll see you on the next one.